Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 15th of April, 2019, and we're just getting into the 2:50 time zone. You know, my heart goes out to everyone if you're watching what's been on TV. I caught it right when the fire first began because I get news out of Europe live all day, and a small fire had begun in Notre Dame in Paris, and it's just overwhelmed the cathedral, and it's unbelievable the damage that it's creating. We'll know more as the night goes on, but with the religious holidays coming up, Good Friday, Easter, my heart goes out to everyone, all of us. It's an important structure for the world. Feel bad about it. As you take a look at what's going on in the stock indices, it's a gradual winding down day. The same thing is taking place in the metals. Now, I don't know if that's because we have a 4-day week. Remember, we have Good Friday coming up, so it's going to be one of these weird weeks. It's also, you know, when you see an event like Notre Dame, the first thing that hit me was the similarity with how I personally felt from 9/11 as I watched those buildings burn. The difference is so far nobody's been killed, thank God. But what a great structure. And I've been there, so you know I speak from experience. When you take a look at what you see going on in the currencies, pretty flat. So let's go to the charts and see the action. The one thing that's fairly consistent is the market is staying into the lower close area with the bias down. I did a report today for TikTok on Bloomberg. And it was about inflation and gold. I was asked to speak about it. And I said the problem that gold is having is inflation almost in every developed country. It's not that it's non-existent, but it's close to it. That has been the problem. There's no pricing pressures, and that's difficult for gold to move in. Yes, it gets a bounce when people get scared of the economy's getting into trouble and things of that nature. But gold's friend traditionally has been inflation, and it's not getting that story. You can see how suddenly the market has just collapsed from last week's high, and we're approaching the most recent lows that we've made in the market. When you look at the swing lines, you've got a downtrend, lower highs and lower lows, and that was confirmed today. Coming into today, you didn't have that. You had higher lows, higher highs. Once you take out 1292.90, you change that pattern. Now you've got the market into the downtrend. To make matters worse, the market had been holding the 100-week average of closes. Now it's under it. That's not to say it can't rally back and fight that number, but more likely is if the market continues with this downdraft, the lower Bollinger Band comes in play against that 1280 level. Let's assume I'm wrong and the market decides to rally back over the most recent high of 1299.10, the swing line high of Friday. Well, you put into play the 18-day average. The point is you can't get bullish. Not if you're a believer of an uptrend's got higher lows, higher highs. You can't get that even if you take that out. You can keep the downtrend, but you're also oversold. And each time this market's gotten itself oversold, you get a pretty hard bounce from those areas. So I'd be a bit cautious. In other words, not a lot going on. When I come to the ETF GLD, what the market did is this is Friday's action. Like the futures, it had the higher low, higher high. Unlike the futures, the closest number in this market is below it, the 100-day average, which it hasn't seen. It got to it today. The futures market, of course, slid under that. What else? It's oversold like the futures. What about GDX? Well, first thing is it's not oversold. Second thing, it's in a downtrend, lower highs, lower lows. Lower Bollinger Band at 2178, next support zone. It's missed hitting it until you go to the beginning of March. Should you take out 2256, you'd negate the downtrend. But right now, the bears are in control of this market. The gold-silver ratio is correcting a little bit, and with that correction, silver acts a little bit stronger than gold, but not very much. It's oversold. It's in a downtrend. The difference is it's been hitting its lower Bollinger Band, and as you know, markets stay under or over a Bollinger Band but 5% of the time. And the first time you hit that number, it's often the support. Well, if you take a look at today's number on the Bollinger Band, Literally, I swear it hit it and bounced away from it. Now it's back under it by a penny at 1790. I'm sorry, 1493 and a half. And the market did get as low today as 1479 and a half, right against that lower Bollinger Band. In the copper market, we have the lower highs, lower lows over the 18-day average and momentum flat. This is market that's pretty much dead in the water right now. Resistance, upper Bollinger Band, support 18-day average of closes right now. In the platinum market, had a nice rally, but it's faltered. Lower highs, lower lows, momentum pointing down, bias still up, which means the possibility exists here for support around 878, but the trend is not up. It's nothing. You've got the swing line down, but the bias up. They counter each other. The market that is still in the bearish phase is the palladium market with lower highs, lower lows. It is oversold. Will the market again find support the way it did right here of the 100-day average? That's what I'd expect to see, and see if the market can start finding an area that it can live with. In the dollar index, you've rallied back up to resistance at the 18-day average of closes. Now, to get this market going again to the downside, number one, you need to close under that number, 96.57. Looks like you're going to do it. You've got the lower highs, lower lows. You can add to that by taking out this low of 96.36 and a half, and wherever this Bollinger Band is at that point becomes the support zone. That Bollinger Band's moving to the tune of about 10 points a day. So I'm going to guess 96.05, 07, something like that. I'm just giving a guess as to where it's at. You can see it's gotten back over the 100-day average of closes. You know, one of the things during days like this, when you get these quiet markets, that I do at least, is I look and see what pivot points are doing. And what a pivot point is it's a formula. First of all, it uses the day's range. And via this formula, and by the way, it's meant for the intraday work, not for the longer term work, but that intraday work, it puts together the high, low, close, and it starts developing just like this. You get a center line called the pivot, and then resistance points above it. Most people use two of them, and two support points under the market. And the idea is you're trying to sell into the resistance, get out at the pivot, or buy at the support, trying to get out at a pivot. I use timing with that, so I've created a 3-part video for you, and it teaches you the formula, it teaches you how to apply the pivot, and then the third video puts timing with momentum of the market to see if you can tie something together for the in-out trade. If you'd like to learn more about it, it's pretty simple. As I said, I've created the video, so what we'll do is we'll send you by link a link to all this, and via that link you just take it, watch the videos, and enjoy. How do you get it? It's simple. Either go to our website, you'll see a carousel of free offers, sign up for it. You can click here if you'd want, if you're watching me on YouTube, and that'll take you right there as well. I'm Ira Epstein. Have a good day. Talk to you all tomorrow.